So that's very interesting. Texas, Arizona, and Utah, I think, have seen progress within the last week, which is very exciting because Texas and California, each of those states is bigger than Canada. And of course, Canada is huge in terms of a gold resource base. If you look at I think it's not even the 4-year moving average, which would capture the cycle, but the 3-year moving average. Bitcoin has gone up every year if you're using a 3-year moving average. And I think it's just becoming undeniable that it is a force that especially now that institutions have to consider it as a new asset class. Bitcoin is not only a technology, it's not only one of the biggest ideas ever, the global monetary system, rules-based, digital, private, all of that, but it is a new asset class.
The crypto market is in turmoil, and Bitcoin is enduring a significant dip, leaving many investors in panic. But what if I told you this market slump might be your last opportunity to jump in before Bitcoin surges to unimaginable heights? Yes, you heard that correctly. This could be the perfect time to secure your financial future. Renowned investor Cathie Wood is looking beyond the current dip. She's not just viewing Bitcoin as a digital currency, but as a new asset class altogether. According to her, Bitcoin is the future, not just digital gold, but a decentralized, rules-based monetary system free from government interference, offering true financial sovereignty. As traditional markets struggle, Bitcoin is positioning itself to become a cornerstone of modern investment portfolios. It's no longer a fringe asset. Bitcoin is on the verge of being too big to ignore. Despite the current downturn, Bitcoin continues to strengthen its place as a global financial powerhouse. With global markets faltering under inflation and instability, Bitcoin is emerging as the ultimate hedge against uncertainty. You might be tempted to panic, but here's the truth. Institutions are starting to recognize Bitcoin's power. And soon, you'll be asking yourself why you didn't act sooner. According to Wood, this could be your last chance to catch the wave before Bitcoin skyrockets. Let's dive into clips from Cathie Wood's explosive interview to gain deeper insight. Don't forget to like, subscribe, and hit the notification bell for more in-depth content. Thanks for joining us. Enjoy the video.
I think it is beginning to turn heads because, if you look at I think it's not even the 4-year moving average, which would capture the cycle, but the 3-year moving average. Bitcoin has gone up every year if you're using a 3-year moving average. And I think it's just becoming undeniable that it is a force that especially now that institutions have to consider it as a new asset class, because we've also put out there, I actually put it out in 2016, Bitcoin ringing the bell for a new asset class. We showed the correlations of returns. The correlations still, even though traditional investors are getting involved, the correlations with other assets still very low. It's absolutely essential that institutional asset allocators take a look at this asset. If they don't, they're not doing their fiduciary responsibility. Bitcoin is not only a technology, it's not only one of the biggest ideas ever, the global monetary system, rules-based, digital, private, all of that. But it is a new asset class. And when you present investors with those three and they're not knowledgeable enough, it's a little bit threatening, or they feel a bit vulnerable. I think this revolution will dwarf the Reagan Revolution, but I grew up in the heyday of active asset management. Now everybody kind of is passive or benchmark sensitive. Those were the glory years. And I think we're going back to the glory years. I think deregulation, I think on monetary policy, I do believe that one of the reasons Trump has become such a fan is, it's good competition for the dollar. And he wants that. He wants, monetary policy to be influenced by it. I don't think he wants the dollar to go away, and I don't think it will. But I think we're going to have, Bitcoin and the dollar as the two sort of reserve currencies out there. So the velocity of money is the rate at which money turns over. Now, in an environment of fear, which is what we have right now, in an environment of fear, what do people do? Well, you've got, I'm going to say 30% of the labor force, which is in either government or quasi-government, including healthcare, education, and so forth. 30% or more of the labor force is saying, am I going to have a job? How is this going to filter down to the state and local sector? That's where the bulk of the jobs are. So there's fear. And that will slow the velocity of money down. So it hit me when Walmart came out and said 2025 is going to be a big slowdown. Last year they had 5% same store sales. Now they're saying it's going to be 3 to 4%. So that's a 30% deceleration in the growth rate. So that's a change and a change. So that's for them to be so sure now, they're seeing something they do not like. So part of it is fear, but there's another reason people will delay purchases or business activity. If they think their tax rates are going down, and again, lesson from the early Reagan years, if they think their tax rates are going down, they're going to wait and hold off on a lot of activity until they understand what that means. And if you listen to Kevin Hassert recently, he's been talking about the quid pro quo between tariffs and taxes. What that means to me, given that Art has been an advisor to every president with the exception of 2 in the last, I'm going to say 30, 40, 50 years, is that we're moving towards a flatter tax system and lower rates for everyone. That's Reagan Revolution. Reagan delayed the impact. The full 25 percentage point reduction took 3 years. The economy fell into 2 recessions. Why? Well, there were a lot of other reasons, but we learned very quickly in 1983, oh my gosh, we went into a boom. They were all waiting for that last time. So you've got fear of unemployment. You've got, wait, how much of a better deal am I going to get out there? And the same thing with pricing. If people think prices are coming down and interest rates are coming down, as President Trump is telling us, and long rates have started coming down. Nobody believed that was going to happen. They're going to hold off for the lower rates and lower prices. So those are 3 delays. Now, what does this mean? Today, we got Atlanta's GDP now estimate is negative for the first quarter. Negative GDP.
Bitcoin is no longer just an experiment. It's a new asset class. Cathie Wood sees its undeniable rise, noting that even on a 3-year moving average, Bitcoin has consistently increased with inflation soaring and markets struggling. Institutions can no longer ignore it. Unlike traditional assets, Bitcoin remains uncorrelated, making it a hedge against uncertainty. Wood believes we're witnessing a financial revolution with Bitcoin and the US dollar. AS Global Reserve. Reese says the U.S. economy has been in a rolling recession, and Cathie Wood believes the final cracks are forming, with consumer confidence slipping and uncertainty rising. She advocates retroactive tax cuts to spark a productivity boom and drive inflation lower. Meanwhile, Bitcoin's role as a strategic reserve asset is gaining momentum, with 50 Bitcoin-related bills moving through 22 states, and talks of selling us assets to fund Bitcoin. Holdings Wood sees a future where Bitcoin, gold, and the dollar stand together. Let's watch more clips from the interview.
We have been saying, and many people didn't agree with this point of view, but I think it's playing out now. We've been in a rolling recession since the Fed started raising rates in 22. It jacked them up at a record-breaking pace. We've never had anything like that. You go back to Volcker, everybody remembers 20% interest rates. Yeah, went from 10 to 20%. That's a twofold increase. We went up 24-fold in little more than a year's time. That was a major shock to the system. And I think we have been one sector after another moving down. The one that did not capitulate was the consumer. And it did not capitulate because of the high-end consumer. Well, guess what? In the last University of Michigan consumer sentiment survey, the high income earners' confidence cracked. So I think we're going to see a completely different tune in the next few months. In order to avoid the Reagan double dip recession, I would make tax cuts retroactive. I don't know how he is such a deal maker. It's going to be amazing to see if he pulls this off. But I think if he only has 2 years before he effectively becomes a lame duck. And he knows that, which is another reason I'm posting this, because, let's get this thing going as quickly as possible. If we said, we're taking your tax rates down, choose a percentage, 3 percentage points, retroactive, if they did this very soon, to, February 1st, or March 1st, let's say, and they finish the negotiation. That would take the uncertainty away. That would take that very important uncertainty away. And honestly, I think we will have a booming economy with much lower than expected inflation, because the productivity gains, after we've been through this rolling recession, and now here's the last leg of it. We were housing, autos, capital spending, small businesses creamed, lower income creamed, finally high income cracking. We're ready for a massive productivity increase, which, I learned again in the early 80s so much. Productivity increases and a rising dollar are two of the biggest antidotes to inflation. And I think we're going to be shocked at how low inflation goes.
But what do you think the odds of a strategic Bitcoin reserve are, let's say, this year?
This year, well, again, it's a high priority. I think this this issue became a one-issue voter issue, right? And the president is going to make good on his promise, because this really helped bring in the young people. And so I do, and Senator Lummis has done, I heard she was here, but she's done an amazing job. She has an incredible staff. So I do think it will happen. Now, I know there are controversies out there. There are truly some, the confiscation of some Bitcoin. That was truly illicit and criminal and all of that. There are questions about others. And then there's the other question is, wait a minute, are you really then going to get all the way up to 1 million Bitcoin? How do you do that? How do you fund it? Well, our gold is at cost on our balance sheet. Land is at cost. I learned from Senator Lummis that a third of the land in the United States and 50% in Wyoming is on our country's balance sheets at cost. Think about that. We could sell a little bit off, and we could definitely, and same with gold.
Do you think that countries will sell some of their gold to buy Bitcoin, or do you think that this is an additive thing?
I don't know the answer to that, but as they're scraping around looking for alternatives, it becomes a diversifier, I think, because even relative to gold, Bitcoin is a diversifier. The correlations are a little higher than to other assets, but still not quite there. There was something, the other thing I learned today was that there are 50 bills going through 22 states right now around Bitcoin reserves. So that's very interesting. Texas, Arizona, and Utah I think, have seen progress within the last week, which is very exciting because Texas and California, each of those states, is bigger than Canada. And of course, Canada is huge in terms of a gold resource base.
The race to establish Bitcoin as a strategic U.S. reserve asset is intensifying, with Senator Cynthia Lummis reintroducing the Bitcoin Act. The debate over Bitcoin's role in national policy has reached new heights. This proposed legislation suggests a 1 million Bitcoin acquisition program under the U.S. Treasury, further solidifying Bitcoin's status as a global monetary force. Cathie Wood has long argued that institutions can no longer ignore Bitcoin. It's not just a technology or an investment, it's a new asset class. As the Federal Reserve grapples with inflation and economic instability, Bitcoin presents a hedge against monetary turmoil. Wood believes Bitcoin's institutional adoption is inevitable, much like the rolling recession she's been warning about since 2022. The economy has been shaken by aggressive interest rate hikes affecting housing, autos, and capital spending. With consumer confidence slipping, Wood sees the U.S. primed for a major financial shift. If tax cuts and productivity boosts follow, Bitcoin's role as a global reserve asset alongside the U.S. dollar could be cemented. Meanwhile, Michael Saylor projects a staggering $16 trillion in potential earnings if the U.S. consistently acquires Bitcoin. He envisions a future where the strategic accumulation of up to 5.5 million BTC could neutralize the national debt and solidify the U.S.'s dominance in the digital financial age. With Bitcoin-related bills circulating across 22 states, America's adoption of Bitcoin as a national reserve asset may no longer be a question of if, but when. As we wrap up, do you believe America's adoption of Bitcoin as a national reserve asset is inevitable? Let us know your thoughts in the comments below. Share this video, hit the like button, and don't forget to subscribe for more updates. Thanks for watching.